I mean, it might be up to now that the way we've spoken about it, someone listening from an HR team is thinking, okay, this is a nice thing to do because I'm a nice person. It's a business imperative because you're completely right. If you're stressed about money, you're not coming to work, full of spring in the air and being a productive employee. And we know that people don't leave their financial stress at the office or the factory door or wherever it is they work. People who are financially stressed are 3 times more likely to be looking for a new job because they're looking for a new job that pays them 2% more than they get now, 5% more than they get now. They might enjoy their job. They might be good at their job, but they're simply having to look elsewhere because they need more money.
Hi HR Nation, welcome back to another episode of the HR Leaders Podcast, the show where I explore the future of work with industry experts and HR executives in the world's leading global brands. Today we've got special guests on the show. We're joined by Dan Macklin, CEO at Salary Finance. Welcome to the show. How are you?
Chris, I'm good. How are you?
Not too bad, not too bad. Bank holiday weekend. I think we spoke about offline. It's all great having a long weekend, but then you realize you have a long list of emails to catch up on after.
I'm in the US. We did not get the bank holiday, so I'm feeling it for you.
Yeah, you're like Chris. You're complaining about an extra day off.
Exactly. Exactly.
Before we jump in, tell everyone a little bit more about your background because you have quite a fascinating journey to where we are now in this new organization. But especially as an entrepreneur, I'd love to share more with the audience and what led you to the current role right now.
Sure. Well, so long story short, I'm from the UK, born and raised there, and worked for an international bank for the first 12 years of my career across London, Singapore, back to London, and then China. And then I think that a big turning point for me was to come to the US back in 2010. I went to business school on the West Coast. Sponsored by my bank, so expecting to be here for a year and then really go back to my prior job. And being in the heart of Silicon Valley, Stanford Business School, fell into really entrepreneurship and suddenly realized that you can start a company with not much more than an idea and a group of you. And that's what we did. A few classmates and I came up with an idea for what became a company called SoFi that may not mean that much to people in the UK, but hopefully does to people in the US and in other places. And that was a great ride. And we took that I left after 6 years, but during that time, we built that company up to over 1,000 employees and we were lending billions of dollars and the company was worth a decent amount of money. So it really was quite transformational in my life and is a public company now and is doing great things. I then left, as I said, after 6 years, wanted to take a little bit of time out. I did that for about 18 months and then really during that time worked out what I wanted to do next. And I realized that in my SoFi days, I did a lot with employers. I was head of business development, and a lot of business development, we were essentially, at least at the beginning, helping people to refinance their student loans. We realized very quickly lots of our customers, our members, work for the same kinds of companies. So we went to those employers and we said, by the way, do you know half of your employee base has got student debt? There are options available to them, but they may not know those options. And we quickly formed relationships with about 700 employers who helped get the word out about SoFi's product. And I realized through that HR and benefits is a really powerful way to get great things in front of people who otherwise may not be aware of them. And more than that, you can actually offer products that you couldn't offer in the outside world. And that's what led me to Salary Finance, where I am today. I'm the CEO of the US division of Salary Finance. The mothership is in the UK and has been going a few more years. But essentially, we're a financial technology company with a social purpose, and we're helping millions of Americans and Brits as well to save money and live happier lives. And we work with big employers to offer great financial products to their employees. And the employees win, the employers win, and we get to build a business off the back of that as well.
Yeah, it's super fascinating because we've seen this intersection of companies now taking more of a role. When you think about benefits, these sort of traditional benefits, you don't think about this space that we're discussing now. But especially over the last 2 years, the pandemic, the whole benefit space is being completely disrupted. And people are looking to their companies for advice in all areas, not just the traditional areas about their 401k or the traditional stuff they're looking at, right? They're looking at, how do I manage my finances? What does that look like? And it's interesting as an employer that that's now something we have to think about, because in the past it wouldn't even have been part of the conversation.
You're 100% right. And I listened, I was listening to a podcast you recently put out with John Frampton, who's in that, within his many roles at Baylor, he's head of total rewards. And I think you had this very conversation that the role of employers in their employees' life has totally changed. And I think COVID has really accelerated that change. And if we go back 10 years, certainly here in the US, healthcare is like 90% of what HR does for their employees in the form of benefits. And it's huge. And then 401k, having some kind of pension worked out. And there really wasn't much room for anything else. And I think over the last 10 years, and as I say, accelerated through COVID times, employers have realized that employees need more help than that. They need guidance, and they look into their employer to provide it. They trust their employer. And the dynamic has totally changed. So even in our world, in financial wellness, a few years ago in the US, we were having to knock at the doors of companies and talk to them about financial wellness, educate them almost about it. It's totally flipped now. Employers are coming to us saying, we know our employees need help and we need to give them something. And oftentimes that's coming from the very top. The C-suite has decided, hey, we need to do something here. And I think inflation is playing a role this year, rising costs. You can't just increase everybody's pay by 7% to keep up with inflation. So what can you do to keep people happy? And I think benefits is a huge part of that. Yeah.
Well, you mentioned inflation, right? It's only getting worse, unfortunately, at the moment, and the rise in energy bills and everything else that's going on. I think this is kind of a global issue. It's interesting because we did our Global Wellbeing Summit in January at the beginning of the year, and part of that we had a whole segment dedicated to financial wellbeing. And honestly, during our calls with the team, I was like, is this really a big area? Is our audience really going to care about this? It's actually drew some of our biggest numbers it's of interest from the CHRO community on that particular session. I was like, wow, like this is really a big issue as well. And even I remember just looking at the chat whilst I was doing the live stream, it was just going crazy with questions in there as well. So I definitely think as organizations, this is no longer a nice to have. And it's going to, in the future, if not now, it's going to be table stakes. So this is something you have to have in place.
It's becoming that way, Chris. And I think that people have realized that everything is connected. So previously there was kind of health wellness over here. There was mental wellness that's become a big thing for very valid reasons over the last few years. And then there was financial wellness. And I think employers tended to compartmentalize those things. And the fact is they're all completely joined up. So we do a massive survey every year, one of the biggest in the industry, and we ask 3,000 people about their money. And the results are they're illuminating, but they're really worrying. So basically 45% of Americans say that they're experiencing financial stress, and that's up from previous years. But then when you look at the linkage between that and stress and anxiety and depression, it's very, very clear. So 83% of those with financial stress experience anxiety, and 56% experience depression. So companies just tackling mental health by itself, that's admirable, but you got to kind of target the causes of that. And honestly, a lot of people are stressed out because they're just having problems, paycheck to paycheck every month. So employers are fast realizing that things are connected.
Yeah. Do most companies you speak to now, the vast majority still don't have anything in place? Is it still really open green space? Like, does that have interest?
About half have got something now. And I think it's also moved beyond just education and information, which I think is, I think you used the term table stakes. It's important to have education, financial education and financial awareness kind of materials on your intranet or wherever it is. But the truth is that's not enough, because it's like, I always liken it to personal health. We all know we should eat better and we should exercise more. So just telling us that more isn't really going to move the needle. What is going to move the needle is if you put a gym in the building, or you subsidize my membership, or you provide fresh fruit, in the lunchroom rather than chocolate, or whatever it is. It's like practical things that you can help your employees with. And it's exactly the same with financial wellness. There's no point just telling people to budget more and spend better.
Yeah.
We all know we should do those things. We need real tools, real financial products to actually enable that.
Yeah. What advice would you give to the sort of HR leaders listening that want to maybe bring this to the attention of their leadership team to get sign off or buy-in? Because I'm sure there are some common objections that you come across.
I think that's a great point, because honestly, the C-suite is probably the last people that should be opining on this issue, because they are well-paid individuals
exactly.
who live on a different planet, quite frankly, in most companies, certainly the larger, 20, 30,000 employee companies. So it's very rare, I believe, that a C-suite individual really knows what their employees are going through. So I would say HR teams need to do a good, they are doing this already. Many of them are doing a great job. Survey your employees, understand what's going, what their challenges are, understand how many are living paycheck to paycheck, understand how many are in debt to their eyeballs. I think very often big companies, HR execs are somewhat scared to do that for fear of what they're going to find out, because it might say, hey, you should just pay everybody more. So I think people are always sometimes a little bit afraid of going down that road, but employees really do need help. And once you find out the fact that half of them are in debt and 68% don't have money set aside for emergencies and all these other horrible stats, you suddenly realize, hey, there's a need here. And I think it's much easier then to build that case.
Yeah, I'm about to say, it's going to be hard for a lot. You said it already, but it's going to be hard for many of them to relate.
Yeah. The simple truth is many people do live paycheck to paycheck. And these aren't just people on low incomes. These are people very often on six-figure incomes, low six-figure incomes. So, but a C-suite is probably not in that position. So they're just not going through that daily kind of challenge of working out, well, do I pay the energy bill or do I repair my kid's chipped tooth because I don't have insurance for it? Or, whatever those life challenges are that come up every day and every week.
Yeah. Well, saying that, I kind of had a similar, I had experience recently. I had to have surgery on my jaw, and I was really humbled. I mean, I don't know what the word is. I remember seeing how much it cost because I got it done privately, and versus the wait on the NHS, which would have been almost a year to get it fixed. And luckily, I'm very fortunate to be in a position where I could do that. But I remember saying to my co-founder, if we didn't have the financial means to do this, I would have to wait an entire year. And even then, I couldn't even get a lot of the care that I would have got privately. For example, I got stem cells injected into my jaw and other things, which aren't even offered by NHS. And it just made me really wake up, especially growing up really poor, to saying, wow, like, if you don't have the money, you can't do these things. And I just felt I thought it was one of those sort of moments of where I had to just have gratitude and be thankful for the position I'm in, because many people aren't in that position. And I was like, wow, people just have to suffer in silence, and we probably don't even know how many people are in that position.
It's true, and I would say the US is worse in this regard than the UK. Having lived under both systems, the US healthcare system is 25% of the economy. It's massive. Healthcare is available, but it's expensive, and with the best intentions, insurance very often doesn't cover all of it. Most of the time, it doesn't cover all of it. There's deductibles to pay. And we actually, one of the questions we asked in this big survey that we did 2 months ago was, for those who have no savings, why is that? Why did you deplete it? And the top answer, the second answer was medical bills. Mm. And oftentimes, this isn't just for people who are working and probably do have some medical insurance. It's for their parents who don't have medical insurance. It's for their kids who have aged out of a program and they don't have medical insurance. Or it's just because their medical insurance isn't quite good enough. And it really is, if you're in a position where your kid needs surgery or something, but it's going to cost you X thousand ultimately, it's a scary place, but it's a place that many are in.
Yeah. So for people that aren't familiar with how this works, walk them through kind of how your company operates. So there's kind of like, you can borrow, you can advance, there's different products you offer. Could you just kind of give everyone a bit of an overview of some of the use cases of what you do? Because you work with some amazing organizations, and it'd be interesting to know how they're using these products to help their employees.
Sure. So we work with generally large organizations in the UK and the US, around 500 plus now, employing more than 4 or 5 million people. And we're doing a variety of things. Ultimately, we're helping their employees to be more financially secure, get them out of debt, get them into savings. There are, I use the term again, table stakes stuff around financial education, financial coaching. That's kind of the bare minimum. What we do that's a little bit different is we actually offer real financial products. So we make it easy for people to do two things. One is to save money directly from their paycheck, as we call it over here in the US. And that's not rocket science, but it's simply having a separate savings account to your spending or checking account or current account, and moving money from your pay every time you get paid into that, and building up that buffer to then help you in those incidents that we've been talking about. So that's the first thing, helping people to save. The second thing, and probably the thing we're best known for, is helping people to borrow in a much more affordable way. I could bore you for hours about the cost of borrowing here in the US and in the UK. And, you know, the number of people borrowing from payday loans has tripled in the last year. The number of people who can't pay their credit card bills and they're being charged over 20%. They're borrowing online at 50%. Mm-hmm. It's really horrendous. Once you're paying those kinds of interest rates,
hard to get out,
it's
basically.
really hard. You can't get out. You're stuck there. Your credit score collapses, and it's really tough to get out. So we provide affordable borrowing options to people. And the way we're able to do that is because we're working with the employer in a really clever structure, in that the employer is helping to validate that an individual is an employee. So we take all the fraud out of the system, and crucially, we're deducting from payroll. So let's say somebody borrows $1,000,
basically, as well for you.
There's less risk.
So it helps you give them helps you give them what they need, because there's less risk on your end.
There's less risk for us as a lender, because we're lending money and we're more likely to get the money back. So we can build a business from there. What that means, though, is we can charge interest rates that are not ridiculously high. We can charge very affordable rates that people can afford. Their credit scores go up 75 points on average, and then they can, you know, get out of that hole that they're in. That's the goal of it. And the employer is facilitating that. That linkage with the payroll system is what's powering this. And it's not. It's something that many countries have done for many years, and for different reasons, the UK and the US. I think because they both had very well developed credit score models for individuals, they didn't look at the employer. But looking at where someone works is just as important, if not more important, than their credit score. If they've worked there for, let's say, 6 years, the fact is they're probably going to be there next year and the year after. And that employment history counts for a lot. Yeah.
Do you think they're more likely to save as well in that process? Because I remember on your website, one of the things I saw, which shocked me for a few seconds, and I thought actually probably sounds about right, where it says 70% of people save less than £100 a month.
Yep.
You think this is easier for them because it's coming straight from their paycheck, straight in? There's no temptation to spend it and have that automated. I can imagine that helps.
Automation, I think, is the key for most things, habits in life. If you get into a habit of doing something and you don't even have to think about it, then it happens. If you rely on people to go into their bank every time they get paid, move money from one account to the other, A, they're going to forget to do it because they're busy. B, they'll do it wrong, or they won't, they'll need to change their password or something. And there's many reasons why they won't get through it. If you automate this, then that's how it works. And look, the pension and the 401k over here in the US is the prime example. As soon as lots of companies are moving to automated opt-in. So when you join a company, you automatically
have to opt out, basically, it said.
Exactly. Mm-hmm. And it has massive, massive impact, because people just kind of go with the flow. It's like, okay, yeah, I'll do that. And then suddenly they're giving 5% or whatever the number is to their 401k. And then 3 years later, they look at it, it's like, wow, I didn't even know I had that, because they never really had it in their bank account. It wasn't there to miss.
And you don't spend it, right?
You don't spend it. Now, look, lots of people, 401k loans are up again. Some people end up dipping into it, but at least you've got something to dip into as opposed to nothing. So yeah, automation's massive. We did a survey recently to ask about the impact of what we do. I'm just checking the numbers here. Before salary finance, 78% did not have emergency savings, and now that number's down to 38%. So we're halving, or doubling, depending on which way you look at it. So it's really important to just automate things and make it simple.
Yeah. So many things that you're saying, by the way, is like resonates with me growing up. You know, my mum was a single parent with 4 kids, and we almost lived on those payday loans. I'm talking about she only really finished paying them off only a few years ago. You know, and you know, I remember even getting my skates. I told you I played hockey growing up, and I remember getting some skates for Christmas, and I knew they were like £500 skates, and I was like, I know we don't have any money, but you don't ask questions as a kid. And it was only years later that I found out she had one of those sort of payday loans just to give us Christmas.
Yeah.
You know, and like,
and the reality, Chris, is those skates that were £500 probably cost £1,000 because of the way that works. And the other thing, at least here in the US, is those loans don't contribute to your credit score. They don't report to the credit agency. So even if you're paying it back diligently, your score doesn't change. So it's probably the fact that your mum didn't have a great credit score, so she couldn't go.
She had to get that. You're right. She could only get, and these people would knock on our door, for the money. Like I literally growing up, my mum was like, "Don't answer the door," and I'm like, "Why? There's someone at the door. Don't answer the door." Like really, it was a vicious circle. Like obviously, again, as kids, we didn't know what was happening, you know, but it was a vicious loop that she was caught. That she was caught into. Like it's just, I relate a lot to a lot of these statistics are quite shocking. I think the other one was like 29% of people run out of money before the end of the month. And that terrifies me, actually, just the idea of that, because I've been there. I grew up in that, with that sort of end of the month, trying to scrape things together for a meal. What have we got left in the cupboards? Because we've got no more money left, or even for electricity as well. So I think all the help that employers can give to their employees to support them in these areas is so important. And you think about engagement, right? And people bringing their best selves to the work. They're not going to do that, right? If they're worrying about bills or how they're going to, you know, pay their mortgage or feed their kids, they're definitely not going to be performing well at work.
Yeah, Chris, this is the main point. I mean, it might be up to now that the way we've spoken about it, someone listening from an HR team is thinking, okay, this is a nice thing to do because I'm a nice person. It's a business imperative because you're completely right. If you're stressed about money, you're not coming to work, you know, full of spring in the air and being a productive employee. And all the stats show this. So I'm just checking the numbers here. We know that people don't leave their financial stress at the office or the factory door or wherever it is they work. People who are financially stressed are 3 times more likely to be looking for a new job, because they're looking for a new job that pays them 2% more than they get now, 5% more than they get now. They might enjoy their job. They might be good at their job, but they're simply having to look elsewhere because they need more money. And employers around the world are, you know, everyone knows retention is a critical thing, and every employee you lose is expensive. So why not try and reduce that leaver rate, that attrition, and improve that productivity by helping employees to get rid of this financial stress? So for kind of moral reasons, it's a good thing, but also for bottom line reasons, it makes complete sense.
Yeah. What's the, I know it's going to be different for organizations, et cetera, and countries, but what's the model look like? Like, are you just making money off of the interest and that's how you guys make money, or are you charging the employer? What was a combination of both? Like, what does that look like?
It's a great question. Lots of companies similar to us do charge the employer. We've taken the view that we don't want to charge the employer. We don't really want to give an employer any reason not to do this. And too often, budgets and cost is just, it's another complicating factor that means that someone else in a big organization's got to say yes. So we don't charge the employer anything. Our business is made from volume. Once we're working with very large employers and we're helping many tens of thousands of their employees to save with us and to borrow with us, we can make enough margin there to make a business, but still providing value, still providing
of course, rates
that otherwise they can't get. That's the model.
Yeah, no, I love that. I'm glad I asked that question because I genuinely didn't know. I have seen companies charge, I have seen them not. It's going to be, and there seems to be quite a lot of companies that are popping up in this space. I get a lot of emails from companies. There's another company popping up. This is very rapidly evolving, and you guys have been around for a long time. One of the first that I come across. But beforehand, who are you typically having conversations with? Is it the HR team? Is it the finance team, just out of curiosity? Like who are the main decision makers, just out of curiosity, that you're typically chatting with?
It's a few people. I think it usually ends up with the CHRO or VP of benefits in the US, or chief people officer, depending on the size of the company. It usually fits within the voluntary benefit world. As we mentioned there, because we don't charge anything, typically finance isn't really involved. There is a payroll piece to it. There's simple integrations with payroll. We're connected into Workday and all the other human capital management systems that just make that simple. But there still is a payroll piece to it. And sometimes payroll reports into finance. Sometimes it's kind of HR dotted line. So that means that sometimes we're talking to finance people as well. But typically it's within the HR world, within the benefits world.
Mm-hmm. And how long does it typically take to get up and running with a company?
Depends.
I know, how long's a bit of string?
Yeah. So the quickest we've done it is about 4 weeks from kind of first conversation to actually offering it to employees. I would say that is fast. That is fast. It's more usually it's about 2 or 3 months. We have had a couple that have gone 18 months or 2 years. Just when you really how
complicated their system is internally and how the integration.
It's less about that. I think it's more just big employers. Sometimes they've got lots of different people in different departments who need to say yes, and they've got lots going on. So there's a legal person that somewhere needs to opine on something, and maybe they're busy for the next 6 months doing something. So. But that's relatively rare. Usually it's like a 4 to 8 week period.
Nice. It's always interesting to ask that question. Because there are so many companies in the space that I'm seeing now, what advice would you give to people that are listening who are considering something like this, looking at your company and others? What are kind of the questions they should be asking to kind of vet these companies and make sure that they are a right fit?
I think there's a few things. I think ask your employees where they need help. That's the first thing. And you can do that through anonymous surveys, whatever else it is. And the reality is you're going to have a range of needs among your employees, from really kind of desperate, I don't have enough money at the end of the week to put food on the table, to all the way at the other end, I'm trying to optimize my investments. And, that's a nicer problem to have than the first one. But having a good understanding of that helps you then work out what solutions we need. And I think it's okay to have voluntary benefits that not everybody uses. Sometimes employers get a little bit hung up on, well, this is only for 20% of the people who need it. Yeah, but they really need it. So exactly, so that it's very valuable. Look for the need, then look for the companies out there that can help. I would look for, maybe I'm a little bit biased here, but look for companies who provide more than one product. So in HR, we know this, they do not want to be dealing with 15 different providers of financial wellness and 15 different integrations and 15 different contracts. So at Salary Finance, we've deliberately targeted to have a broad range of products, because we know that there's only so many hours in the day. So not looking at just a point solution, but a much broader solution that could grow as the need grows, or as the appetite grows within the employer. And then, of course, do your homework on the backing of the company, the financial backing. You need to know they're going to be there in a year, in 2 years, and that's very, very important. Yeah.
And also, I'm sure there's especially because many of the listeners here are global businesses, they need to ask the question, do they have a global offering for their employees? As well, which I think companies sometimes miss that one out. Like, you have a global business, can this provider actually service your global employee population?
I missed that, but that's a good one. We're speaking to a couple of employers at the moment with 200,000-300,000 employees around the world who have a big presence, certainly in the US and the UK. And the fact that we're in both of those places, now there are regional variants of the products, regulatory wise and others, but the fact is, the overall company is the same company. The backing is the same backing. We're backed by really big investors who are public companies. And it just speeds up the whole process rather than doing this in every country.
Yeah. No, I love it. I know it's interesting that we've done 500 plus episodes of this podcast, and this is the first time we've spoken about this topic. It's actually crazy. And honestly, I've never really heard any of our audience even bring up this topic, which is quite sad to say, but I'm just being honest, that we don't have many people really talking about this. I know a lot of your clients on your website. I was looking at it while we were having a chat. I've not heard any of them really speak about the work that they're doing in the space. And I think that we should definitely be having more conversations and being more transparent and doing a better job of that. So hopefully this helps.
I think it helps. It will help, Chris. It's coming back. Like I said earlier, I think there, at the beginning, a few years ago, there was some almost guilt in providing these, in that it was a kind of tacit acknowledgement that we're not paying our people enough. Because I think people always, and you see this sometimes when there's press articles about a big employer launching a new product, in the comments down below, it's, well, why don't you just pay them more? You know, and it's a very easy line to get to, particularly in comments on websites that are anonymized. So I think to some degree, employers have shied away from thinking about the space traditionally. That's really changed over the last few years. And in the UK, it's actually a bit ahead of the US. So in the UK, for example, we work with the top 10 largest food retailers, grocery stores. Mm-hmm. We work with every single one of them. And the US is fast catching up now. It's becoming, okay, yeah, we need to have this.
Yeah, because the reality is that most people, they're doing it anyway, but they're probably doing it really badly. Like we talk about payday loans and other ways of doing it and credit cards, etc. So as an organization, if you can be there and support them, again, we go back to the engagement that brings, the performance that brings. You know, they're going to really look at their organization and say, this is a company that really cares about me. You know,
correct.
And also we've seen that when we look at compensation and benefits now, it's really a customized. Before it was like a one size fits all sort of approach. Now we have to customize it to the individual needs, and they will come and go. There may be people that, you know, now they don't need it, but may need it in the future, and vice versa. There's different stages of their lives that they may need it, whether they have kids or buy a house. So having these things in place is super important.
100%. And I think another thing that employers sometimes used to say, less now, is I don't think employees want us kind of big brother style preying on their financial lives. Like they want to keep the outside work. The truth is they don't. They're very happy for their employer to offer these solutions. They don't have to take them. It's not, you know, it's a voluntary benefit. The clue's in the name there, but they want help, they want guidance, and they want access to products that they can't get. And that whole, you know, very traditional, well, I work here and I earn my money and then I'd have my personal life over here, that's blurred now. Like the modern generation is a lot more used to sharing information, much more than older generations would. And that's the same in the workplace. They're happy to engage in these kind of conversations. They want their employer to help them with this stuff.
And also, we haven't spoke about this, but we kind of maybe do another conversation, is also the employee experience element of the way in which they access this information and the usability. You know, most of the younger generation never even walked into a bank.
Correct.
The idea of them opening, physically walking in there, like my daughter, when she grows up, she's going to be like, "Why you used to physically go in this place to line up and get your money out," or you know, those things as well. So also the element of having been able to access and have this set of tools and be able to view their finances in this way is huge moving forward.
You're completely right. The best relationships we have are where the take up is the strongest, where the employees really maximize the value from these programs, are where employers have very strong apps that their employees go to for their day-to-day life. Benefits are on there. They see the benefit. They realize they need it. They click on that benefit. And then within a couple of minutes, everything's done, because it's like it's one journey. And everything's integrated. So that validation that I mentioned earlier, the employer validating, all happens in the background. The employee doesn't even see that.
Exactly, yeah.
And then the payroll deduction is automated. So you make things simple for people. It's amazing that they'll use it. You make it complicated and demand that they kind of book an appointment at 2:00 down the road on a Wednesday. They're not going to do it. They're busy.
Yeah, exactly. And many people don't even know they can do these things, that they're even available in the first place. Let's be honest. So we've kind of gone full circle. Well, listen, it was really a pleasure having you on the show. It's got a very good time to wrap things up. But where can people, if they want to connect with you, where can they connect with you? And if they want to learn more about the work you guys do, where's also the best place we can send them?
Salaryfinance.com is the website. We have more information there. I'm on LinkedIn. Dan Macklin, very happy to respond to people. The great thing now is lots of companies are waking up to big employers are realizing this is a thing. So we have a great team who can talk you through it. Even if now's not the right time, it might be planning for next year. All of that stuff is great. But I'm just pleased that employers are are waking up, and those early adopters have now seen the benefits of this, and it's much more of a movement now, which is great to see.
Yeah, 100%. Well, I'm glad you come on the show. I'm glad we did a show about this topic, because it's been, took us long enough to get around it. But I think also now more than ever, with everything that's going on around us, it's even more important. I think people are definitely feeling a financial strain, especially over the last 2 years as well. So anything we can do as employers to help, we should be doing it. But apart from that, thanks for coming on, and I wish you all the best until next week.
Thank you, Chris. Appreciate the time.